Hey guys, how you doing? Hey, this is your July 2024 East Bay real estate market update. But before we get started with that, couple things, man. First of all, if you guys are looking to buy or sell a home, love the opportunity to talk with you, look around the screen. My number's going to pop up here. Give me a call. Also, if you're somebody who stays updated regarding the real estate market, again, look around the screen, subscribe button's there. Go ahead and subscribe to our channel. And finally, comment below. Love to hear from you. Let us know how we're doing. Let us know if you have any questions. So in this video, again, we're going to talk about the current real estate market as of July 2024. Now, one of the things we're going to do is have some slides here pop up behind me. The first one, take a look. This is kind of a new slide for us, and have been using this in a while. And this is the average and medium annual prices year to date. So this is the price as of June 31st, 2024, and also June 31st of all the June 30th of all the other years. So you're comparing year to date numbers when looking at this. Now, one of the things I've seen in the past is people take year to date numbers, for instance, May of 2024, and compare to end of year numbers. And so you get this inflated look because, again, if we're looking at the average number in May, that's the highest point of the year. Comparing it to the end of the year, it's going to make this year look much stronger than it is. So this number is really a fair comparison, and you can see our trends over the last couple of years. We took a little bit of a dip last year, but we're bouncing back right now. That dip stemming from interest rates. I'm going to talk a little bit about interest rates here in just a little bit. Let's take a look at the next chart. Now, this is a chart you've seen quite a bit, and this one is the monthly average price over the last 5 years. You can see there's definitely trends here on the East Bay that we can look at, and now we see something a little different that happened back in 2020, but got to remember that we were dealing with COVID-19, and we were actually in quarantine at that point in time. So we had to deal with COVID-19. So those sales got pushed back towards the end of the year. One of the things here we can see is definitely there's an annual trend that happens. This allows us to really predict what the year is going to look like. One of the things we can see is typically we tend to trend downwards towards the end of the year. We just don't know how far down it's going to trend and things. There's some things that say it's going to trend way down, and there's some things that could happen that possibly it may not trend so far down and things. We may continue with a fairly strong year. So let's take a look at the next chart. One of the key drivers in this chart we can see is inventory. Inventory is so important to price. The blue lines that you see, or the blue bars here, that's actually average price, and you see it's about the last 12 months. The orange line that you see going through there, that's inventory, and that's months of inventory. So if it's a 2, it's 2 months of inventory that's available at that time. If it's a 3, it's 3 months of inventory that's available at that time, and that's a key driver of price. Now, you look at this when inventory's up, prices are down. Okay, so look at that inventory going up, prices going down. Now, when inventory is down, prices tend to be high. So you're going to see inventory drop off, maybe the following month or two later, we're going to see prices jumping up. Now, here's one of the things that we're seeing going into in June of 2024. If you notice, price or inventory is trending upwards right now. So again, higher inventory leads to lower prices. So we see a couple things happening right now where we're going on towards the end of the year where prices tend to be a little lower. Also, we're seeing inventory going up. That rising inventory tells us the possibility that we're going to see prices coming down either next month or the following month or so. So something to keep your eyes on, especially if you're a buyer right now. And one of the things also, I say buyers, if you're selling a home and buying another home, you're also a buyer, okay? And so in some cases, you may not sell your home for as much, but you can actually buy at a much better price and things like that. So let's go on to the next slide. This one, again, it's simply inventory. If you look at the green, it's months of inventory. Green is 2024. And now one of the things we've got to understand about this is looking at where that green line is compared to all the others. We're seeing the highest inventory we've ever seen. So right now, if you're a buyer, we've got highest inventory we've ever seen. Prices prices are not what they could have been. If we just saw interest rates falling off, prices would have been through the ceiling and this inventory would have been down. But we're seeing higher inventory, so it's telling you prices are actually probably a little lower than they would have been if interest rates were a little more attractive. And so this means, it might be a great time to consider jumping out there and look at buying something, because if we see interest rates falling next year, where it's probably we're going to see a market where prices go up. So again, that green line is inventory. It's months of inventory, and the higher the inventory, lower prices are. So consequently, we're seeing some of the highest inventory we've seen in the last 5 years. This is another chart that you guys have seen before and things. And basically what I'm doing in this chart is just comparing, most of my numbers is Central Contra Costa. It's cities of Concord, Pleasant Hill, Walnut Creek, and Martinez. And what we want to do is compare that to the overall East Bay, because we want to see that the trends that we're seeing in Central Contra Costa are the trends that are happening throughout the East Bay. So, by looking at comparing these two, we can kind of validate that these Central Contra Costa trends are also happening in different cities. Now, you may see different numbers from city to city, but you'll see similar trends. One of the things, a real test of this is if you look and compare the top to the bottom of this chart, you see the red on each one. You notice that the reds are all in the same places. We see the same things happening year over year in Central Contra Costa that's happening throughout the East Bay. A couple things that are significant that we see happening this year. Number of homes being sold, it's actually up slightly. I think it's 1% in Central Contra Costa and 2% in the overall East Bay, which is Contra Costa County, Alameda County. But despite it being up, if you look last year, numbers were down. The number of sales were down significantly. In the year prior to that, also number of sales were down significantly. Now, if we take a look at inventory, here's what's interesting. If you notice, inventory is up. The number of homes being listed is actually up. So again, remember, we had that conversation. Number of homes being up, that means increased inventory. Higher inventory means lower prices, okay? So prices right now are probably a lot lower than it would have been if interest rates were a lot more attractive, which was kind of the expectation, was that we were going to see some pretty strong interest or decent interest rates this year, where we're going to see rates dropping a little bit. The next slide we're going to look at, this is the interest rates, and this is what interest rates have been doing in 2024. One of the things that we see is interest rates right now. It's on the high side. We're seeing it kind of dip a little bit, and it's coming back as of last week. This is the 30-year. This is the national average of 30-year fixed rate, and so we can see where interest rates are right now. Now, one of the things, interest rates going to play such a key role going forward, because this is going to dictate how people are qualifying, how much they can qualify for. So it's really going to dictate what they can buy and what prices. And higher interest rates are keeping people away from the market. Consequently, it's slowing the market a little bit. So let's take a look and see what the projections are for the market. Now, what you're looking at, this next chart, is actually the Federal Reserve Open Market Committee dot plot, and this is where they project out what they anticipate what the Fed fund rate is going to be. Now, the Fed fund rate does not affect mortgage interest rates, but what it does do is it seems that the Fed's funds rate and the 10-year yield are in lockstep with each other. So we see the Fed fund rate dropping. We tend to see the 10-year yield dropping a little bit as well too. When we see Fed funds rate going up, we tend to see that the 10-year yield is also going up. Now, there's other factors that are going to affect the bond market, and so it's not the Fed funds rate. And the Fed funds rate doesn't have any direct impact on any interest rates, whether it be mortgage or the 10-year yield. But here's the thing: that 10-year Treasury yield has a direct effect on what the mortgage environment's doing. Okay, so if we see that 10-year yield going up, we're going to tend to see the mortgage rates are going up. But if we see that 10-year yield falling, we're going to tend to see mortgage rates going down. Okay, so hey guys, now going into the rest of the year. One of the things, we could take a look at going into next year. We see those trends where we see it dropping off towards the end of the year. We see that the dot plot. They're predicting maybe one more drop or decline in reduction in the Fed funds rate or the discount rate that the actual Federal Reserve adjusts. And if we see that, we may see a drop in mortgage rates, and may see more people coming back to the market. That may push prices up in the real estate market. Now, the other thing we're seeing, again, remember that trend we're looking at where it's dropping towards the end of the year. We are seeing higher inventory. Higher inventory tends to lead to lower prices. So most things are telling us that we're going to see lower prices towards the end of the year. But who knows? We may see falling interest rates. If we do see something like that, we see interest rates coming down, we're going to see a lot more buyers coming to the market. Those buyers are going to take up that inventory. That inventory is going to get low and prices are going to go up. So there's definitely some things out there that could be happening with the rest of the end of the year. We're going to keep you updated regarding that. If you have any questions or so, please comment below. Let us know how we're doing. Let us know if you have any questions. Also, look around the screen. My number's here, guys. If you're looking to buy or sell a home, we'd love the opportunity to talk with you. Also, please support our channel here. Subscribe. Look around the screen. If you stay updated regarding the real estate market, look around the screen and subscribe to our channel. Also, I'm sure there'll be another video that pops up somewhere around here and things. Please take a moment to look at that, and also take a look at some of our other videos. If there's any questions. And again, my number's here. If you have questions about the real estate market or East Bay real estate market, reach out to me, okay? Hey, thanks, guys. I'll talk to you soon now. Bye-bye.